Hey guys, welcome to the Rational Investor and Trader. This is my first video ever on YouTube, and today I want to explain about the morning star. It's a candlestick pattern in technical trading analysis. I took this topic because it's very important topic and the probability of the success when you use this morning star candlestick pattern is high. So today I'm going to explain this. So let's start. So what is actually the morning star candlestick pattern? So it is a bullish candlestick pattern, meaning when you find the Morningstar candlestick pattern, you should go for buying the stock or the underlying whatever it is. So how many days it will take to evolve, or how many candles it will take to evolve? So it will take three consecutive candles, meaning if you choose for the day timeline, so it will take 3 days. If you take for a 1 hour timeline, it will take 1 hour. So in this example, as you can see here, so here you can see the morning star candlestick pattern has formed. It took three consecutive candles, right? So here it's a nice candlestick morning star pattern. So where it appears exactly, it should appear at the bottom of the trend. Why? Because we are going for a long. So when we take the position, it go up, right? So it appears at the bottom of the downtrend. So the probability of being success when you use this Morningstar candlestick pattern will be very high or strong when your timeline is more. For example, the day one will be more stronger than the 3 hours uh, timeline when you consider looking at the Morningstar candlestick pattern. So in the same way, the week one Morningstar candlestick pattern is more strong, or success rate is high when you consider it one day. Okay, so the bigger the timeline, the stronger the pattern. Okay, so now let's understand the logic behind the Morningstar pattern or kind of Morningstar candlestick pattern. So market is in downtrend, bears in absolute control, meaning, see, like the stock is falling down, it is making new lows, new low, new low, new low, like this. The stock is falling, right? So nothing usually happening, like reversing or nothing like that, right? So what happens exactly on the day one? See, like the stock again opens gap down. See here, this is the previous day, this is the day one of the Morningstar candlestick pattern. So the gap open more lower than the previous day, right? So on the day one it opened low and it make a new low. So that is the case on the day one, right? So what happens on the day two? Day two, something interesting happens here. On the day two, what happens? As usual, again the market opens gap down, but as soon as it opened gap down, by the end of the day, the by the end of the day, the bulls enter into the market, as well as the bears are there in the market. So they fight each other. The bears want to take the stock down, and the bulls want to take the price up. So in the fight, at the end of the day, a nice pattern forms, a nice candle forms, which is basically a doji or a spinning top. So in this example it is a doji. Okay, I will explain about the spinning top in the later sessions, but most probably you will get doji. Okay, so here you can see the doji has formed here. The Whether it is doji or not, that is the only thing matters here. Whether it is a green candle or red candle, it doesn't matter. It should form a doji. Okay, doji or a spinning top. Okay, here you can see the doji has formed, meaning it is an indication, it's a clear indication that bulls have entered the market. Okay, they are in the equal length. I mean, as the number of bulls is equal to the number of bears, so that's why the stock, it neither went up neither went down by the end of the day. Okay, so what happens exactly on the day two? Now let's look. So on the day three, the market opens gap up, indicating now bulls are in the control. So it opened the gap up. By the end of the day, the price of the stock goes till the day one high. day 1 high. Okay, so here this is the day 3. Okay, so in the day 3 the market opened gap up and it went till here. By the end of the day, by the closing of the session, it almost reached the day 1 candle, right, the day 1 high. So here you can see, so it is a pure morning star candlestick pattern. So here three things made confirm: the trend is down, the day 1 is like this, and day 2 you got more low, but the bears started coming in, and the day 3 uh, a nice bull green candle, which is equal, which made the high equal to the day 1 candle, right? So here a nice morning star candle is formed, which means you should go for buying the stock or the underlying. So what is the trade? So now you found there is a candlestick pattern. How should be the trade, right? So on the day 3, on the day 3 itself, like here in the on the day 3, exactly 10 minutes before the closing of the trading session, you should enter the stock. You should take buying in this stock. Okay, where buying in the stock where the candlestick Morningstar candlestick pattern forms. So you have initiated the trade, but before that you should make sure that candlestick is formed. Okay, it formed the candlestick pattern, and you will initiate the trade around on the day 3 of the candlestick, and around 10 minutes before the closing of the session. Okay, so it's now good, you enter the trade, but where should be the stop loss? Keeping a stop loss is most important than anything by then entering the trade. So where should be a stop loss? Stop loss should be the low of the day 2 candle. Why? Because it is the lowest of the trend, right? So from here, where is the lowest candle? You can see right here, it is the low. So lowest low, so here you should be stop loss, you should exit as soon as it touches here. Okay, okay, now you enter the trade, you kept the stop loss, but where you should exit the trade. Okay, also you should find the destination, right? So where is the destination now? So you should exit the trade after entering by using the candlestick pattern where there is resistance, right? So here there is a good resistance here in this chart which I took. So here as you can see, it has hit here. So this is your target, right? So the price has came from here to here. So you will exit, right? And how many days it took to come here? And it is a day candle. The chart which I'm showing you is a day candles, right? Okay, so here 1 2 3 4 5, so it took 5 days to reach here, and the stock has moved from 58 to 68. Okay, it's 58 to 68, so it's almost 10% of 58. So in 5 days you got 10%. Okay, so it is a good quick bucks, and it is a very nice candle. Whenever I initiated the trade using this candlestick pattern, I almost ended being profitable. So I will show my trade in the next video or in coming videos where I been profitable by using this candlestick pattern. This is the end of the session. I hope you like this video, and this is my first video. I want to say you that uh, all I want to say is I want to share my knowledge, whatever I gained in my stock market, gained in the stock market, and I don't want to do any paid courses. I don't want to do anything paid. I just want to uh, share the knowledge for free. So all you can do is doing a like, subscribe, and commenting this video, which helps me to keep motivated to do more videos like this. And hope you will do subscribe and like and click the bell icon. Thank you.